So here we go, my UK portfolio review for January 2024. This is where I go through my UK portfolio. I do this every 3 months on the YouTube channel. If you do want to see it every month, then you have to join the Patreon. But this is where I show you guys how my UK portfolio is doing. I've done my portfolios on the YouTube channel for many years, I think around about 7 years now, and I do this so it keeps all the transparency, so you know what I own, what I don't own. You can see how much I'm up, how much I'm down on this portfolio, and like I said, it just keeps up that transparency where other channels don't exactly show what they're buying, what they're selling, how much a position makes up, what they're up, what they're down. I try and show you all of that, so I hope you do enjoy it. Obviously the only thing that I don't share in these portfolios is exactly how much I have on every stock. The reason for that is just a bit of privacy. I've got friends, family that watch it, so I don't exactly want them to know exactly how much is there. And as well as that, I want to give myself a bit of protection. There's been history before where certain incidents have happened where people have known how much money are in certain positions and people trying to get into the account. And you've probably seen there's people in there all the time that are trying to hack into my Patreon, the Discord. There's people commenting, scammers in the comment section. And in general, there's some horrible people on the internet that I'm sure you sometimes see in the comment section. So I want to give myself a little bit of protection as well. And I'm sure most of you guys can appreciate that. But I do have a big chunk of the majority of my wealth tied up into into the stock market. The UK portfolio makes up about 25% of what I have invested into the stock market. So without wasting any more time, let's get stuck onto today's video. So like I said, if you do want to see the portfolio review every month, I do that on the Patreon. If you don't want to see that, then I do that every 3 months on the YouTube. Now, here's the portfolio. I'll spend a minute or two on every business to kind of give my thoughts on how everything's going. So let's start at the top. Aviva, I'm up on this position 9%, which is really nice. I've actually been averaging up a little bit on this position as well. I do really like Aviva. It's been a very good performer in the last few months since I started buying up the shares. Also collecting a 7% dividend yield on this. For me, I'll actually get around an 8% dividend yield on that. So yeah, I'm happy to hold Aviva. I am hoping for a little bit of a drop if it can, because I think this stock should be around the £5 to £6 range really. So if I can get a little bit more of a drop on this to buy a bigger position, I will do. But I like having a little bit of Aviva in there. Airtel, I'm up 25% on Airtel Africa, and that's generally where the stock has been a little bit underperforming to the rest of the market, but I still have big optimism for where Airtel Africa goes in the next few years. At the moment, there is a drop in the revenue and profit. Now, this actually isn't happening with the business. They're actually taking on a currency impact at the moment, because the currency that is currently being used in a lot of Africa countries is getting devalued, and because of that they are growing their revenue and profitability, but they've got to recognise that on their account. So it looks like they're dropping, but they're actually still increasing on a neutral basis, and once that impact is out of the way, the profitability should continue to ramp up and the revenue should continue to ramp up. So at the moment it looks maybe a little bit expensive, but as soon as that profitability goes back up, and we're talking nearly 750 million profitability on a 4.7 billion market cap, that's going to be interesting. And as well as that, obviously I'll be picking up a nice dividend as well, which I think is around about a 3.5% dividend yield as well, so that will do very nicely. I've held this stock for around about 3-4 years now, so I've been collecting a nice dividend on that. And it's worth pointing out this portfolio doesn't have any dividends included, even though Aviva, obviously a 8% dividend yield will contribute massively to that, and obviously been collecting the dividend in Airtel for the last 3 or 4 years, and obviously that would add up onto that one where the dividend included would probably push Airtel Africa up over 35% now. But the next one is ASOS. ASOS, I think, can turn it around. I like ASOS because they sell different brands, so if one brand goes out of popularity, they can sell the other brand. I think they'll be able to turn it around. We've got Alpha Wave, which is a smaller position. I bought some Alpha Wave, so I have some exposure into the semiconductor space. The last update was a little bit meh, so I'm hoping to show some signs of improvement in the next update and start ramping up the revenue and the profitability. So I'll be keeping an eye on what goes on with Alpha Wave. Barrett Developments, we're up around 21% on Barrett Developments. There's kind of been the excitement that the bottom of the housing market might be in, so we've seen the recovery start happening. When the full housing market recovery does finish for Barrett Developments, I would expect that to probably be up more towards 40-50%, and as well as that, I am picking a nice dividend up on Barrett Developments. You'll see here that the UK portfolio is a little bit more dividend heavy. Boohoo is in a bad situation. It's actually the stock I like least in my portfolio. I'm not happy with Boohoo. I've called out plenty of times that the CEO, in my opinion, should go. He's not done a good job. I also look at the financials. The financials have nowhere near improved at all. The revenue hasn't done a good job. The profitability has not been good. The styles haven't been good, and they're not making the right decisions to combat Shein. So with all that together, I am worried about Boohoo. I think I've already sold a third of my position off. I'll probably sell the next 2/3 off in summertime if there's no improvement over the summer trading period, and then I'll probably sell the rest at the back end of the year unless there's a sign of improvement. So Boohoo is my stock that I am least confident in the portfolio, and I am very close to moving on from Boohoo, so we'll see what happens. Cakebox down about 3%. Cakebox, really good financials recently, decent last year. I just noticed this is actually Card Factory. They had a bid put in around the current share price, so I think there's a bit of a bottom here, and yeah, I'm happy to keep holding Cakebox. Card Factory, I'm up 70% on Card Factory, and that's with a lot of averaging up as well. I keep buying Card Factory. First started buying it around about 3 years ago. I would be up over 200% since that if I held my shares since that time frame, but I keep buying more and more and more and keep trying to make it a bigger position into the portfolio. Yeah, I think even right now, Card Factory at 6 times earnings, very good financials they've just done as well. I think it's undervalued, so I don't mind buying a bit more Card Factory. A bit of Darktrace, we're up 9%. Darktrace we actually used to be up over 40% on, but recently, since around September time, it's had about a 23% pullback. As well as that, I've been averaging up quite a bit on the position as well to make it a bigger size. I really like cybersecurity plays, and I wanted to have one in my portfolio. Darktrace looked a lot more undervalued to the rest of the cybersecurity stocks, so I started buying into that one. So that is one of the only few growth stocks I have in this portfolio. We've got Forterra, which is down 2%. The only thing with Forterra that I don't like is that the insider side of it, there hasn't been much activity. I would have thought with the historic lows that Forterra is at, there'd be a few more insiders buying up the shares. In fact, there's only been a sell, and the sell actually came from the CEO in April time, which I was a little bit disappointed about. If you look at Barrett, there's been some recent buys. I think there was a few more just out of this 12-month time frame, but even then, in the last few months, you've got on the 22nd of September, the CFO bought a chunk of shares, around about 50k worth of shares, and then you also have a 4k buy from a member of the board directors as well. So you look at a lot of house builders in this sort of space. You know, there's been a lot of insider buying. With Forterra, it hasn't happened. Obviously not a direct house builder, but obviously have big reliance on the housing market, and makes me a little bit like, why are they not buying? So yeah, a little bit disappointed with that, and I've actually thought about one of the big things I want to do is reduce the amount of positions I have in the coming 12 to 24 months, and that's when I look at and go, I prefer Barrett Developments a lot more, and I've been a little bit like suspicious about the activity, and I also think the financial report wasn't as good as Barrett's, even though obviously they're a bit limited on what they can do at the moment. Flutter, I've not actually touched Flutter for a while, but I was actually thinking that it might be a good time to start adding into Flutter. Obviously, most of my focus has been on DraftKings recently, but yeah, maybe we should buy some more because actually the numbers don't look too bad for the valuation right now. Jet2 up 58%. I would like to buy Jet2 a little bit more. I've held that stock for around about 4 years now, and I have averaged up, but maybe not as much as what I should have done. But yeah, Jet2, very good airlines. The only thing that is probably a bit, I think, has stopped me from averaging up a bit more on Jet2 is that obviously there's a big change in the leadership going on over there. So yeah, we'll see what happens. Greggs I've had a Greggs in the portfolio for about 4 years as well. They've been a nice performer, up 75%. Lovely dividend that I collect as well from Greggs. Originally bought during the CV dip. I was up over 100% on the stock. I sold out half a position because I just went, this valuation is really high. And since then, the stock hasn't really done anything for around about 2 years now, which is what was actually a really good sell from me. I kept half of it because I thought, Greggs is one of the best UK businesses out there, so I did keep half of it. But yeah, I've not really done anything with Greggs since October. It's never got really low enough for me to buy, and also I don't really want to sell it, so it's just sitting there nicely in the background, collect some dividends at the moment. Hollywood Bowl is a stock that I have been buying a lot over the last few years. I bought Greggs and Hollywood Bowl pretty much at the same time. And once again, Hollywood Bowl is a stock that I could be up a lot more if I wanted to. When I was buying in the CV time, I could be up over 120% on this position. But I keep buying more and more and more, and definitely got the rewards from it. I still think it's not a bad valuation at 15 times earnings. I actually collect around about a 7% dividend yield with the average that I have on it as well, which is really nice. So yeah, I mean, obviously when you start including the dividends on top of Hollywood Bowl and how long I've had it for, I'm probably actually over like 80-90% up on Hollywood Bowl at the moment, and being a really good performer. Definitely one of the best picks I've had on the UK side recently. JD Sports down 8%. Now, if I actually did JD Sports a week ago, I would have actually been up like 25% on the position, but then they came up with a profit warning and the stock went lower. I personally think the stock has gone way too low on this profit warning. You look at the numbers that they put out, they were still good amounts of growth. The profitability is still fantastic. I mean, we're looking that they're going to close off accounts at about 612 million. Obviously 612 million on a 6 billion market cap company, growing as well. It's pretty impressive. And as well as that, if they can keep hiking up the profitability, it looks very cheap. So yeah, I'm a big fan of JD Sports at the moment. So yeah, we've got Legal & General up 13%, very much basically like Aviva, up 13% on that one. Obviously as well, collecting a really nice dividend. Had this one for a few years in the portfolio, so even though I'm up 13%, I've had this for about 3 years, so been collecting a nice 8%-ish dividend yield on that one with my average as well. So when you add the dividend on top, I'm actually up over probably around about 30% on Legal & General as well. So yeah, that's done very well. Got some Money Supermarket. I've said previously on this one, I really like Money Supermarket. I just want the stock to drop. So I can buy. I want this position size to be double, but I need the stock to drop a good 30%. So I'm waiting for the 30% drop in the stock. National Express, I'm down 9% on National Express, which has had a bit of a rally in the last few weeks. Gone back to about the levels it were before it had the profit warning, saying they're a little bit behind on the profitability than what they expected. Obviously, the next update is key. We really need to see them start ramping up the profitability. If they do start ramping up the profitability, we will see the stock rise definitely back up to a £1.50 stock in no time. But the big thing we need to see them do is deliver the profitability. So the next update will be key from National Express, or Mobigo Group as we should say now. We've got some Supreme, up 5% on Supreme. I've got a decent position. I do look at the financials and the valuation. I mean, realistically, it's around about a 7 times earnings now, 3% dividend yield. I keep thinking, do I buy more? And then I keep weighing up the risk of the vaping industry and if anything can happen to it. So I'm kind of managing my risk to reward, but I do really like the valuation for the numbers they're doing. So I don't know whether to extend that anymore. We've got some SL Capital that is down 76%. This has obviously been a bit disappointing how it's performed, but I still believe that SL Capital can turn it around. The big thing that has been disappointing is the profitability, and the profitability hasn't been where it should be, and we've seen profit warnings come from S4 Capital. If they can ramp up the profitability, then it will be successful. That's the big thing that we are looking for, and we can see here that the accounts for the end of 2024, we're expecting around about 10 million profitability and around about 86 million in free cash flow. If they can do 10 million in profitability and 86 million in free cash flow, obviously then you're going to be trading around about 3 times free cash flow. And if we can start moving back up to growth as well, and in 2025, if we can do 100 million in free cash flow, I mean, you're 2 times free cash flow there and 30 million profitability. I mean, if they can do these numbers in the next 12 to 24 months, S4 Capital will go back up to a £1 stock. It's easier said than done, and we need to see them execute, and there's definitely been mistakes in there, and we've seen Sir Martin Terrell, even when he's come on the YouTube channel, over hiring, obviously the cost of acquisitions as well. And we know the marketing space is going through a tough time. You only have to look at another company like Future, for example, and look at their stock chart. I mean, how much does this look like S4 Capital? So we've seen all multimedia companies get hit this much. So we know there's a tough time going on there at the moment, but we need to see the profitability ramp up. And I think they can do it, and I still believe they can do it. I'm not buying any more until I see them do it, but I think we could still see that turnaround. Then we've got some YouGov, that's up 19%. I do really like YouGov, and I would like to make it double the position what it is at the moment. The only problem is I can't pay 37 times earnings. So I ideally need to see around about a 30% drop in the share price on YouGov to buy some more. I'm not going to sell my position though, because I do have a decent position, but really to buy more YouGov, yeah, I need a big drop in it, so we'll see if it happens. So yeah, that's the UK portfolio overall. Like I said, the only things that I'm kind of consider selling are really Forterra, and then if Boohoo continues to carry on performing poorly, I might get rid of Boohoo. The stocks I'm buying, I'm not really buying Airtel Africa. I'd like to see it have a drop. It can easily have a drop off earnings, so I'll see if that happens. Alpha Wave, I want to give another update and see what happens there before I do commit some more cash into Alpha Wave. Card Factory, I might buy some more. I think 6 times earnings is still cheap. Dark Trace, I like it on the current drop that it's currently on. Flutter, I've got to have a good think about and maybe buy some more into there. JD Sports, I am liking JD Sports at the moment as a bit of an opportunity. Money Supermarket, I would love to buy some more, but I got to see a bit of a drop. Supreme, I want to buy more. I'm just weighing up the risk with the regulations. So yeah, those are the stocks that I'm kind of considering selling, and those are the stocks that I'm considering buying. So yeah, a few opportunities there. I'm not going to lie, the stocks that I'm seeing a little bit more opportunity at the moment, believe it or not, is the US market. I'm seeing a few small caps in there that I'm liking a little bit more, but there will be a few stocks I definitely nibble in the UK stocks in the next coming month. In fact, on this portfolio, I have recently bought 3 more times in some of these positions in the last day, so I am actively buying a few, but we'll see how much I carry on buying through the rest of this month of January anyway. So hope you enjoyed the portfolio, guys, and hit the like button, and I'll see you in a bit.